Tuesday. Yes, it is Tuesday. April 29th, 3 o'clock p.m. Eastern Time. 7 melt up. We are up again today. S&P opened a little bit lower, around 54.90 or so. Let me double check the numbers here. S&P this morning opened up around 55.08, went all the way up to 55.70. Overall, pretty quiet. Had a little directional push late in the afternoon, 110. Market started to go a little bit more directional. We've got some levels that are filling up nicely. I wouldn't be terribly surprised if this little melt up situation is climbing into a 557, 557 to 560 strike on the PY. We have some key resistance ahead. So I have been pruning like crazy. I feel like Daniel-san introduced to his first bonsai tree. I am 91 trades in for the day, still taking some profits. That's the good thing, is I've got profits to take. This is all part of that de-risking, deleveraging I've been adamant about the last month or so, is if the market offers up a chance to protect profit, do it. I am now sitting on a little bit more cash. I'm at 1.574, which is over 50% of this account, which I think is where I want to be. And I still have hedges. Hedges are out to August, October, and December in case I need them. We're coming into some key resistance levels. I don't think this market melts up. I've been asking traders all week whether we're going to all-time highs first or we're revisiting lows first. Could be neither. Could be, fail to hit the highs, fail to hit fresh lows. We just have a bunch of noise in between. But just in case the market is turning south, I want to be taking some profit along the way. So just considering this entire move, high to low swing, we've pulled back just above the 50% zone. This fib, let me drag this out here. So this fib, get this one out of the way. Put this swing all the way from high to low. We are at the 50 to 55% pullback zone. It is possible to have a bit more of a melt up going into this 618 zone. And I've already done measurement. You watched any of my other videos last week. So low to high, higher low to higher high. There's some symmetry around 5,700, just above that handle. If we have a cup and handle where this would be the neckline, or the cup line rather, there's your low high, there's your pullback. Here's the break of that cup line. We're on the right hand side of the trend line. There is a measure move that gets us all the way up to like 6110. I'm just not overly bullish to that level. If we get there, that's a pleasant surprise. I obviously wouldn't be offended by that. But the nice thing is I'm creeping up near all-time highs for the year and creeping up towards the high watermark of the year, and we're still way off of the recent highs. So I consider that like a decent improvement. I have taken losses. It hasn't been flawless. I've had some losses along the way, but for the most part, I fought the good fight. I've got some accounts that are up into double digits now. So 43, let me just do a number on this one. So 43 divided by 284. So I've got an account up about 15%, a couple other accounts in the teens, accounts in like the 4, 5, 6 zone, and just a couple accounts that are just off a break even with some different permissions, like a cash account. That's a tough one to trade outside of dollar cost averaging in, very limited option trading. So anyway, this is a good spot to be de-risking, deleveraging. So that is the plan. That is what's been happening. I'm keeping the hedges on just in case I need them. This week with MAG 7, take a look at your MAGS ticker. I'm going to go ahead and close out a trade on Palantir really quickly. So Palantir, if I go to all accounts, this one is like up 98% of max credit. So I'm going to go ahead and close this one down. I'm going to go through each account. So Palantir. This one has no exposure. There we go. So I've got a ratio spread for May 16th that's up about 97%. I have a bunch of puts that are out this summer that are up 98%. I'm just going to close all of this. I'm up about $570 right now. I'm going to go ahead and close it. It's 98% of max credit. I don't have to do anything necessarily, but rather than waiting 17 days, rather than waiting 52 days, I'm going to take a majority of the profit right now. So this was Palantir for $1.85. Looking to close that down, and then puts combo was $4, and looking to close that out for about 10 cents or less. So this ratio spread, closing this one at hopefully 6 or 7 cents debit. Perfect. That was a 185 down to 7 cents. Not too bad. And the puts here, $4, closing at 9. Yes, sir. Closing at 09. That's a good little gain. So 185 0.07. So I kept, 185. So I kept 96.2% of that max credit, and $4 minus 0.09 kept 97.7% of that max credit. So just going to go through each account, pull off my trades in Palantir, also get some buying power back. I had, 400 shares worth of puts on that one. Overall, pretty good. All right, let's keep going. Same thing here for 9 cents. Very nice. Ratio spread for 7 cents. Awesome. All right, getting some decent fills here. This is the put combo 1, 2, 3, 4. That's ridiculous. When the VIX spiked as high as it did, that was a pretty good trade, considering we're at 116 on Palantir. Naked put combo. There we go. So collected $4, closing it for single 9-cent debit. There we go. And this is a ratio spread. Closing this one down for a small 7. Ooh, it's even less now. Let's go 5 cents. 7 cents is the ask price. 6 cents, not bad. Okay, up the line. This is a ratio spread. This one's out to May, up 98%. Close this one down as well. So that ratio spread. $1.85 close out for 7 cents. And $1.85 closing for 7 cents. There we go. Moving up the list. Ratio spread. Closing for 7 cents. So what I want to do is I want to review some Mag 7 earnings as well. They're coming up tomorrow after close. We have, I think tomorrow is Meta, Microsoft, and Thursday is Apple, Amazon. 4 big players, lots of market cap. Maybe the remainder of the melt up lies on those. We also have non-farm payroll data on Friday, so that combination could be really interesting to see if there's any type of volatility this week outside of this little tiny slow volume melt up. So time will tell. I'm going to keep just taking some profit here. Palantir ratio spread. There we go. Closing 7 cents. Okay. So that one's closed out. This one has a combo for June. And this is the ratio spread. Closing $4 for 9 cents. Thank you very much, Miss Lippy. Thank you for a 7-cent ratio spread. $1.85 closed at 7 cents. Nice little win there for $588. Palantir, that is a pure cash account. IRA account. So no Palantir here, huh? No, that was early on. All right, no big deal. Palantir not here, and Palantir should have a ratio spread here. Yep, ratio spread. Okay, nice little winner. Okay, I'll continue to comb. That's 104 trades on the day. Not too shabby. Michael, my Pfizer bot. What's up, dude? They didn't even have earnings yet, or did they? They did. Yeah, I mean, I'm happy to see Pfizer doing what I want it to do. My trade on Pfizer is going a little bit better. I'm still down overall, but if it's a sign of things to come with a value play plus a decent dividend, Pfizer, for some of the exposure I have, basically I have some shares and I have a diagonal spread. The 20 by 29, we're trading at 24. There's a long way to go on this trade. If I get this one called away, here is what it's going to look like. So my net debit on this out to May, I pulled in about 96% of that $29 strike. It may be a benefit. Let me see what this looks like. Since we have earnings now, let me see what my Pfizer trade looks like. My net debit is $6.75. So if I were to see a nice little rip here, I can close this one down. Let me look at a roll really quickly. I'm going to look at this as a roll from 29. I might roll it down to 28 as long as I can get a decent premium for it. Let me see here since we're heading up. This trade is probably going to serve me better just to let price naturally work up into the $25, $26, $27 zone. Where do I want this to get called away? I mean, not at 27. I mean, that would only make me maybe $6 or maybe 50 cents to a dollar, which is, for 1,000 shares, it still adds up. But if I can get this thing to get called away into the high 20s or 30s, it's a lot more profit. So let's say that I get it called away at 30 bucks. Let me take a look at the roll here. So I have this one out to summer of next year. That's my long call at $20. So if I roll this, if I keep the strike at 29, I'm going to see how far out I have to go to get in a decent amount of credit. And that's the issue here is like, if we're not really getting an expected move here, we're not going to see much premium. I'm better off not necessarily selling anything against it unless I want to do like a tighter collar trade. I could go out to, November, December. I mean, I can get $420 on a December roll, which wouldn't be terrible. I get 42 cents if price gets called away. That's pretty decent. I'm obviously leaving some on the table if we're above 29. I think the better option for me would be if we get up to $27.50, $29, even if we get a run to $30 on Pfizer, I'm better off if I want to get rid of it, selling a covered call at that strike. Okay. So rather than rolling and going out, I've got to go out, 7 months to get 40 cents on this. I mean, that's fine making $420, but I do think that the upside potential is pretty decent. I mean, fundamentally, I think this is, discounted cash flow model shows like a $70 stock price. And we will see. So price to earnings still relatively cheap. Fair value $70. Against its peers, it's relatively cheap compared to Johnson & Johnson. These are all this is a space like the healthcare sector. This is XLC, XLH. The heck is healthcare? V. There it is. XLV. If I want to participate in some healthcare, let me see if I could do the premiums might not be great, but even like a ratio spread, a naked put, like something on healthcare, I think could be pretty promising. Let me go XLV. We're trading at a 34.3 IV rank. If I went kind of mechanically, like 52 days out, do I get something that I like? Not really. I get an income trade for 52 days to make $77. It's not that exciting. If I did a ratio spread, I could lower the cost basis a little bit. I get 90 cents on this trade because I can max this thing out. This wouldn't be a terrible trade for a little income position. I also don't mind like sector-wise having healthcare in the portfolio. I think this is one sector that should benefit from a shift in the overall U.S. economy. There is a tech play here. There's an AI play here. There is I think labor and jobs are probably going to be mostly in service in healthcare. We might lose out jobs in the tech sector until we really onshore manufacturing. Onshore manufacturing is not going to be putting people in butts in assembly lines. It's going to be automation. If we're going to onshore manufacturing, it's going to be done with the top technology, and I just don't think it's going to be putting people back to work. It's going to be, do more with less and automate and have hopefully high margins with manufacturing. So anyway, healthcare I think is a good sector. We have the baby boomers in the 70s, like their late 70s, 80s, once they're retiring or needing that last 5, 10, 15, 20 years. They're going to need some help. It's a wealthy generation, one of the wealthiest of all times in this country, and I think they're going to need lots of assistance. So this is one way to participate. Obviously, if I was going to say what prices I want to own this at, it would be down here. So around $125 to $120. I mean, this isn't a terrible trade. If I went out to June, price falls. I mean, I don't mind getting like 80 cents with a profit trap, and then I'll kind of reload this trade if things look a little bit better. I might take a trade here for 52 days out and then go out to the end of the year and see if I can push this down a little bit lower. But the probability of profit's about 92%. Chance of assignments around 14% ish. My break even price would be 129, 128. So 129 minus $1 minus 80 cents. 127.20 be my break even, and that is around a 11% chance of assignment as far as like where I'd be at the money. Okay, so anyway, do I like the trade that much for 52-day income trade? Kind of, but if I went a little bit farther, if I go to, oh geez, that's a big jump. That's it. So I have to go June or September. That's a big jump. September. I think I might consider doing both. If we go, let me try the 126 by 125. That's a little bit better for just a sector trade. So $1.61 income out 143 days. I think I'll take both of these trades. I'll do a ratio spread with about this one is interesting, only 88% chance of profit. If I move these down, I sacrifice some income, but I bump up the percentage to 96%. That's interesting. I don't mind, like income wise, I would obviously like to get $160, but ownership wise, I wouldn't mind owning this with a $5 profit trap. So this assignment would be 120 minus 5 minus 81 cents. I mean, that's $114 ownership on the sector. That would be kind of nice. 114. Oh yeah, we'd be down 28.5% in the sector. I think that's a pretty good looking trade. I'm going to take this trade for, I'm going to double the size here. So I'm going to go 4 on the put side and 2 on the buy put side. So I get about $160 income, and I wouldn't mind taking the shares at 114. 114, I think I could repair this. At the money call, let's go up maybe 30 days. I still get about $2 to $3 at that. So I mean, I think I could do a pretty good job repairing this. Okay, I've got plenty of capital to deploy. 1, 2, 3, 4, 5, 6 accounts, 7 accounts, even 8 accounts. I think 8 accounts can handle this one. So not bad. Do I want to go heavy on all those? No, because this is an IRA account. These are margin accounts. This is a IRA account. So I'll go this way. For my portfolio margin accounts, which is this one, this one, this one, and this one, these are all portfolio margin accounts. They're going to get the 4 and 2 ratio spread. The other ones are going to get a 2 and 1 or 1 and 2 ratio spread. So let me see if I can get filled here for, maybe I get lucky at like an 85-cent fill. $85 not filling. Let's go to 80 cents. Okay, kind of 75 might be final offer. See if I can get $150 out of this. You dirty dog. Try 70 cents. That's the mid price. Come on, sector. You're better than that. All right. 65. That was easy. 130 bucks, I guess, is the income trade. Plus a $5 profit trap. If I own it, I'm willing to own it. Okay, let's work through this trade here. So little income trade, 65 cents. This account, 65 cents. Okay, so that is in. Get this one added in. This is XLV PM accounts. It is a September 19th expiration. Buy the 125 put, sell the 120 put with 2 contracts and 65 cents credit. 4-2 ratio spread, willing to own. If price were to come down below 120, I'd be assigned. 120 minus 5 minus 65 cents. Break even would be 114.35 if assigned. All right, now the other trades. Let's go other accounts here. Okay, not all of these are going to take it. I will go. This one's margin. Yeah, I'm going to take this trade. So let me go similar, but take down the contract size, and let's bump this one up. So it's a slightly different income profile. Actually, you know what? I'll just take see if I can get 70 cents in this one. 7634. Man, 12K IRA. That's rough. That is rough. 1608. I'm going to take it on a margin account. Okay. All right. So that's it. Trades are in. This is in 1, 2, 3, 4, 5, 6 accounts. Anywhere between 65 and 69 cents filled. Okay. So a September 19 expiration. Buy the 125 put, sell the 120 put, and 65 cents credit. Be a 114.35 if assigned. One sector that I don't mind hanging out at. So 120 there. So all the upside, and my job would be to repair this thing if needed. Take a screenshot of that. Okay, so that's ready to go. Let's talk earnings. I'm going to do a quick peek. Nice, Dean. Traded at 9:36 a.m. Had to wait a bit for my reward, 12:48. So we went after a pretty big profit, right? So rather than just taking the 15-20% we grabbed this morning, you held on to it a little bit longer to grab your $100. Fair. Yeah, I mean the good thing is price was pretty cooperative until that 1 p.m. handle. That's when it got a bit more directional, but price was very good inside here. Some traders also keep in mind that some traders with the daily profit play, it's like when you get paid in here, they do it again, they get paid, they do it again, they get paid. That's where I don't love trading the afternoon because the market tends to be a little bit more directional after like 1 p.m. Eastern time. So I'm usually trying to be out of that trade by 12:30, 1 o'clock. Make that decision. Even if I'm down, I try to exit. I mean, this market's really choppy right now. I understand, but I'm saying there's ways to get $100 a day without having to sit and wait on it all day. You know, like you are going for a much higher profit target. So if you're in my sessions in the morning and you're going after a 245 debit, trying to make $100, okay, so $100 out of 245, my friend, you're going for a 41% profit target. Just being honest, mechanically speaking, you're not going to have a bunch of winners that way. You can win and getting it, but I don't know. I'm just saying, like, it's a lot harder based on the mechanics of that trade to hold it for 3, 4, 5 hours to get paid. So I'm just saying, like, I've had 2.5 years, almost 3 years of studies, zero DT environment. It is better at like a 15 to 25% profit window. And if you want to take multiple trades, that gets you to $100 a day. That's easier, higher probability. You don't have to sit and wait all day. So just saying, keep that in mind. I mean, if we took that trade in the morning and I waited for a 40% profit target, we wouldn't have a bunch of winners. In fact, I think I still have this running. I'll just show you. Okay. So I'm going to take the same trade here and I'm going to go after a 40% take profit. Okay. 40% take profit. Let's run it. I understand. It's still the same. I mean, same rules apply. So I'm just going to show you, like, if you want to go for a higher profit target, it's going to make the win percentage way lower because you're going to be forced to hold that trade later in the day. So I went for a 40% take profit. Okay. And your average hold now is going to be around 3 hours, right? It still wins a lot. It still makes good money. That's going after a profit target of 40%. Like, it still works. But there's been some sideways periods. If I take off and that's with no stop. If I put in a stop loss here, 100% of the premium collected. I'll just see if that improves or doesn't. Okay, and then I want to run through some earnings. I have a screenshot here. So putting in a stop loss, I shave about 10 grand off my trades for the last 3 years. My win percentage goes down about 10%. I do decrease the average losing size, but I mean, my compounding growth rate's around 11% without a stop, 7.3 with. And I mean, obviously, I'd much rather trade it to survive it for the day. So it's a better trade. I mean, what is impressive though is, I mean, 40% still makes money. No stop loss lets it work. We're not going super wide in these trades. So anyway, have some fun with that. I'm gonna run this at a 30% just for fun. But Dean, I'm just do what you're doing, man. Like, I'm just telling you that mechanically running through the studies that I've run through, like, the tests will show, the back testing shows, 15 to 25% is ideal for more profits, quicker profits. And I get it. 3 trades a week, you got to be a little bit picky. Okay, a 30% take profit, you're going after, like today was an example, you went after 40+%, but going after 30%, still make the same amount of money. Win percentage increases 90%. It's pretty good. Iron butterfly, that is a very, very tricky trade. I know what you're talking about, the iron butterfly like this, right? Where you're going to trap it is you sell a call, you sell a put, right? And then you buy your wings and you create an iron butterfly like this, and you're trying to trap that price at the end of the day. It's good until it isn't. In order to do that, you literally have to pay attention every single moment of the day. And if you're seeing like a 5 or 10 point move, you start like taking losses and put on another one, taking losses, put on another one. It's like you have to have a very tight leash on all these trades. So not my favorite. I don't like to sit and micromanage every single minute of the day. So it does work, but I think the best time to be a iron butterfly trader is in a high volatility environment at the end of the day between 2 and 4 p.m. Not all day every day, because the iron butterfly is going to take literally all day to pay you. So if you get in here at the very beginning of the day, your P&L is going to look something like this. The blue line is going to represent, the actual P&L. So later in the day, yeah, maybe it starts to go a little bit higher and you get a small profit win there. And then a little bit later in the day, and then later in the day, and then eventually, like, yeah, it starts to head up here. And then at the very, very end of the day, it starts to look more resembling of the profit trap. But that's, of course, if price never moved. Very, very difficult. Okay. So, I mean, look, butterflies are great. Iron butterflies are the sell side of that. they're great because they can be cash settled on SPX or XSP. They can be settled, future settled. But the way that I see, full services running that run like Iron Butterfly trades is this is where price is at for the day, and they put in their butterfly. When price goes, up a little bit, they take a loss here, and then they put in another Iron Butterfly. Price goes down here, they take a loss here, they put in another Iron Butterfly. I mean, sometimes I see 7, 8, 9, 10 trades on a day. And what you're hoping for is these losses are so small that you eventually get a chunk at the end of the day that pays you and cash settles where you can finish net positive. It is tricky, and higher volatility, the markets can move and move aggressively at the end of the day. I mean, if you want to see an example, there is a YouTube video on a guy that lost about $116,000 on this exact trade because it was moving so quickly at the end of the day. He ended up getting blown up on a couple of trades. So I would rather never have that risk. And I have no idea, what that trade entailed outside of he got caught on the wrong side of it, couldn't maneuver fast enough in a 0 DT environment. You know, you got to know your strategy. You also have to know the blind spots in your strategy. I mean, everything looks good on paper, but in a live environment, if you don't know the plan B or the backup plan, that's why, learning the process makes all the difference in the world. That's why define risk and trading small makes all the difference in the world. But like I said, I'm not going to micromanage my trades every single day. Daily profit play for me is pretty perfect to do, 60 to 120 minutes, and I'm usually out with profit, and I don't have to worry about it, and I can focus on pruning my portfolio like I did today. I mean, I've ended up taking about 110 trades off for profit today, and the list just continues to build. I've raised it. This is actually the high point of cash for the year. When I started out the year, I was sitting around $1 million cash, and now I'm at 1.587. That's pretty good. I'm happy with that. That's more than half of my account. And I'm also, sitting up a decent chunk for the year, trying to preserve that and eliminate, as much outlier risk as I can. So, butterfly, yeah, I get it. So anyway, there's something for everybody. The nice thing is whether you want to be a short-term trader or you want to be a swing trader, you want to be a long-term investor. I mean, I think the best way to handle any portfolio is have backup plans, have way to improve your cost basis, have ways to, maximize your gains, have ways to reduce and cut risk. There's a lot of shortcuts to do that. I mean, even if you took a trade out for, let's say, 90 days and at 45 days, you manage it. You take a trade at 45 days, at 21 days, you manage it. You might have heard that from Tasty Trade, right? You go out 365 days, at 180 days, you manage it. If you want to reduce volatility in your portfolio, win or lose, take your option trades by the halfway point, you just manage it for better, for worse. Sometimes you hit, 30, 40, 50% profit. A lot of the trades that I took off today were somewhere between 50 and 97% profit of max credit that I collected. But the nice thing is as this market was falling, so as the indexes were falling, across the board, I had a pretty good assortment of I can spread out risk, I can take good trades, I can get into liquid stocks. I'll just read off the list today. It's like IBIT this week was a winner. I'm just going to type it out here. So what were winners this week? IBIT had winners this week. Google had winners this week. SPY had multiple wins this week. AXP had multiple winners this week. Apple had multiple winners this week, and I rolled some calls. Tesla had winners this week. I'm still sitting on shares of Tesla that might get called away. I might roll it for another maybe $300 to $400. I want to see where Tesla closes by the end of the week. But I still have winners on a 1-1-1 trade. PayPal, I didn't take a trade. I took a trade on Spotify today. That's a new one. I'll just type that up later. Let's see. Snap, I had a winner on Snap. I had a winner on SMH. Had a winner on NVIDIA. Multiple different trades on NVIDIA. Winners on Palantir. So all these combined add up to over 110 trades of profit. Granted, it's not all on one account, but it's spread out, spread the risk, and yeah, a lot of active trading. And this is what I wanted. I wanted to be active. If this market is going to show some recovery, I wanted to be as aggressive as possible in here and see some profit. So I did, and the risk that I did take and the losses I did take are mostly washed. And I'm up on the year a pretty decent amount. So I mean, the market's still for the year from high to low. Markets are still down about 9.6% from the all-time highs, 9.5% from the all-time highs. And I'm up around 5% for IRA accounts, about 15% for some of my portfolio margin accounts. I'm pretty happy with that. That's a pretty good outperformance at this time. Also, if the market is going to hit resistance and sell off coming soon, then I will also be better positioned for my hedges to start working, and a couple of these key levels that could be, a 3-to-1 hedge, a 5-to-1 hedge. I have some ridiculous ones like 40-to-1 hedges. So I will keep a very close eye on those to also help, kind of build and battleproof my bottom line. Okay. All right. So in the last little bit, we've got about 20 minutes. I am gonna I've got a webinar at 4 p.m. if anyone would like to join me. Give me a second. I'll post the link in the chat here in the next few minutes. But at 4 o'clock, I got to jump. I got a hard stop. Then there's a webinar coming top of the hour. So I wanted to go into some earnings plays. I've got a list. I was kind of pricing things out today for my newsbreaker service, WGS. I'm just going to go down the list here and just see if I can spot some big liquidity levels. So WGS trading at 117. We're going to see a lot of these like pretty evenly distributed. That's what tends to happen during earnings is you see things kind of both sided. But I will be pricing these out. So WGS, don't see anything off the bat. ENVX, anything here? We're at $6.79. I mean, not really. It's going to be, but unless I get 50-cent options, maybe. Snapchat, I already took Snapchat. Let's see if this one has some gamma levels to the upside. So certainly looking better. So earnings come, I mean, this looks pretty good to just get a pop to the upside. So right now, Snap should be able to go up to like $10 or $11 based on an earnings move. I hope that it does. I think if I buy the shares, I think it looks pretty good. If I'm wrong, I mean, I'd almost rather not trade an option trade here, simply because if I'm wrong, I'd rather just sit and own the shares. So let me see something real quickly on Snap. I think I already took profit on a couple of my trades. Snap. All right, so let me put a fresh trade in. So we do have a earnings play. It's after market. Actually, no, they already came out with earnings. What the hell am I doing? Well, never mind. Snap. Did they have earnings already? What the heck? I thought they are printing earnings today. Yeah, it's aftermarket. What the heck? So Tasty, they must have flipped that because this says before bell, but this is incorrect. So anyway, there's still a play here. I want to see if I buy shares. So if I buy shares and do like a quick collar trade, I'm wondering what this looks like. If I buy shares at $23.96, sell and buy. So I can buy shares at $23.95. I'm on the wrong freaking stock. Hang on. There it is. Yeah, it's tonight. Yeah, that was my fault. I was on Pfizer for some reason. So if I go to Friday's expiration, if I were to buy shares right now at $9.10, if I were to, let's say I sell the 950 and I buy the 850, I can lower my cost basis down to like $8.90. If price goes up, I get it called away for a quick income trade. If price goes down, I have some protection. This wouldn't be awful. Let me see if I go out another couple of weeks. So the 9th, the 16th, the 23rd, the 30th. This one might be a little bit better to go slightly higher, slightly lower. So I buy it at 9.10, break even is $8.90. I've got to put out 31 days. If price immediately drops, I can take some profit on that 53 cents put. If price goes up, I get it called away for a break even of around $1.10. So an income trade over the next 31 days. I'm capping the upside. That's the only drawdown with this trade, or the potential issue is like I'm making it like a very strict income trade, but I've got protection to the downside in case it's a dump. If I get it called away, I could roll this, $10, I could roll it, maybe go out a little bit farther. So not a bad income trade. It's not going to set me back an arm and a leg. It's only $326 of buying power. Quick income trade for maybe $110 or so. Let me see if I can roll this up. This is a little bit better. So I can still get this for a small credit. Let me see if I can get this trade. Break even is going to be right around $9, but I have $1.50 of upside and I have protection to the downside. I don't mind making $150 on this trade. So I think I'm going to take this trade. Let me put on a See if I can get filled here for a credit. So can I get filled for like a 5-cent credit? 5-cent credit, and I'm going to buy the shares. So I will go ask 910 for 100 shares. All right. So here's the way the math works. I got filled at 908. So 9.08 is my fill. I took a $5 or 5-cent credit. So 903 is my break even, but I'm protected to the downside if price goes below 8. I'm going to type this all up. So Snap has earnings after market today. This is a earnings play. So buy 100 shares at 9.08. Add collar, which is a sell 1050 call and a buy $8 put. The $8 put is a 54-cent debit. I'm going to look to see if that increases in value. The expiration is 5/31. All right. So this will go into Project Options Edge. Let me see here. Spotify, HIMS, IBIT. Those are fine. Intel. Still working through Intel. All right, new trade here. So buy 100 shares at 9.08. Sell 1050. Call. And buy an $8 put. 05 credit on the collar trade. Break even is 9.03. Max upside is Snap greater than $10.50 for $1.47 per share, or I guess per contract. And the $8 put debit is 54 cents. So if price falls, I'll look to protect the put for profit and lower the cost. Overall price target for Snap is $13 to $15. Okay, so I'm in that trade. New trade. So got this over here. So buy 100 shares at 9.08. Add collar. Sell 1050 call. Buy $8 put. Credit on collar. Downside protection plus call away income greater than 1050. There's the trade. So 9.03 is my break even on that trade, Michael. Okay, so the way that trade will work is if we have earnings and Snapchat is, a big rip to the upside and it gets above 1050, then what I'll probably end up doing is try to roll this 1050 call for another maybe 15 to 30 days and see if I can grab another 20, 30, 40 cents out of it just to increase the net gain. Otherwise, in 31 days, as long as it stays above 1050, I make money. So the way I look at this current market is I think there's going to be a lot of indecision. We might have a bit of a pullback prior to the July tariff window. But if there is some melt up material in this kind of bullish window, it could be, now until basically July. Just because I don't know how much certainty or clarity we're going to get on the tariff front. Everything's kind of jawboning from Trump, Besant, I think who else? Navarro. I mean, some of the other people in the administration just kind of talking through. Amazon pulled an interesting play today where supposedly it says tariffs are listed in prices just to show what people are paying. It's like, is it real? I don't even know if that's real. I logged into Amazon today. I didn't see anything like that. Did anybody see Amazon reflecting price changes and stuff? I mean, I don't buy a bunch of stuff on Amazon, but it's like I'll get little groceries. So let me see if I just add some soda water. I mean, I don't know. Maybe it's on just certain items, but still, I thought it was kind of fake news at first. You say that, but then this is what earnings have done: positive, 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 positive. We've had 1, 2, 3, 4, 5, 6, 7, 8, 8 out of 9 out of 10 were positive prints. I look at it this way: it's just technical, man. I mean, that's the low. I think there's limited downside, but if we do go down, I want to have that protection. I know that I'm shortchanging the upside, but if this becomes an easy income trade, I'll just make $150, no big deal. But if it goes to the downside, yeah, this kind of sucks. But we're sitting here at levels where I think, I don't know why it would go necessarily lower. I mean, I use Snapchat with some family stuff. I use Snapchat with my nephews, and it's a popular platform. There's a ton of users, but they have somehow not found a way to monetize it. I mean, the lows back in 2018 were like $5. Well, if earnings are that bad and we dip down to like $5, well, longer term, it's like, okay, I'm going to ride this down and try to lower the cost basis and see if Snapchat can get back into the teens. Okay. Isn't that an easy math problem? You have 8,000 shares at a 43-cent dividend. It's pretty good. As long as you're not, as long as your call side, if you have any options on it, as long as you're not having a call side that's below the current price. Otherwise, there's your 43-cent dividend. The shares you own, that's a pretty good chunk of profit. So, because I mean, you'd be in for whatever cost basis, but roughly you're getting, $3,400. No, that's not right. Sorry. Let me do the math. A 43-cent dividend, it's per share. That should be right. Yeah, if you got 8,000 shares, should be per share. So looks to me like about a $3,400 dividend. Spot. Oh, my bad. Yep. Hang on a second. So I've got to edit this in Project Options Edge. This is Snap. Snap, and then I'll edit that too. Thank you. Edit is Snap. There. So Snap, max upside, Snap, Snap, Snap. All right, we're good. So that's the adventure on old Snapchat with earnings coming out today. Protection to the downside. Maybe we have a pleasant surprise. I know if it's above 1050, I get it called away by the end of the month, by the end of May. I wouldn't mind rolling it out a couple of times. I still have some shares of Snapchat. I'm trying to take that up into the $13, $14 range as well. Okay, let me keep going through some earnings here. All right, Snap is looking okay. Pull this down here, and I do have to go in about 8 minutes. Let me find a link. Give me 1 second. Or if you're in my Telegram, I think my Telegram has it too. prosperitypub.com/income engine. There it is. So if you'd like to register for the webinar at the top of the hour that I'll go live in, there's a webinar. $3,440. It's 0.43 times 8,000 because it's 43 cents a share. Because they're declaring a quarterly dividend, yeah? Is it a quarterly dividend or annual dividend? I'm thinking it's going to be quarterly. roughly, look, their dividend's like 7%. So roughly speaking, if you've got 8,000 shares, I don't know what your price target is, but 8,000 shares at, let's say, $25 is a break even. I mean, that's a ridiculous amount of money invested in Pfizer. If you get a 7% dividend over the course of the year, you're making 14 grand, right? So 43 cents a quarter should roughly add up to about that 7% dividend per year. That's not bad. I mean, that's the potential play of like low beta, low correlation, and very low volatility with a high dividend. I mean, that is a kind of protected play for the portfolio. You do pay taxes on dividends, which kind of sucks. So if it's in a Roth account, not a big deal. But if it's like a margin account or a trading account, a lot of people don't realize like dividends are kind of a wash if you're paying taxes on them. So I'd say if you're doing it, a Roth is a better vehicle versus a margin account. Okay, a few more minutes, and I'm just going to whip through some earnings here. So let's go float this one out here. Snap looks okay to the upside. I see a nice little $10 and I see a nice little $11 liquidity level. I wouldn't be shocked if we do get up there. I hope that we do actually. Let me see what a trade would cost if I throw this in for my double up service. So if I went out to, let's go, if we're up on Snapchat, if I did an 850 by 9, I mean, if we stay above $9, I get 27 cents. That's 100%. I'm going to try to take this trade. All right, this will be double up trade. Need to stay above $9. All right, double up. Post that real quick. And double up. New trade, snap, 5-2 expiration. Buy the 850 call, sell the $9 call, 25-cent debit. Okay, here, adding this up for double ups. Let's go buy 850 call, sell $9 call, 25-cent debit. In. Got a few minutes to sneak that one in before the end of the day. Looking for these liquidity levels to get hit. $10, $11. The average move this week is only going to be a couple of bucks. We're expecting about a $1.49 move. If it's $1.49 to the upside, bring it on. That's, bringing price up to like 1040, 1050, something like that. That would be enough to get this spread to pay me in full. So if I let it go all the way or I take a majority of the profit, I'll take the win. Okay, a couple other setups. We have Mag 7 tomorrow aftermarket. I can talk more about those tomorrow. Let me look at SMCI. Anything that stands out here? This one has earnings 29th after close. I'd love to see a strike price up here. So SMCI, I mean, I just have a couple of minutes. I'm just going to write this one down. SMCI hopefully gets up to like 38 to 38.50. Not a bad trade. Let me see what that one's going to cost me if I get into that SMCI out to the second. 35 by 36. Get in for a buck. It's not bad if price goes up at all. $0.30 to make 20. 51 cents to make 50. 51 cents to make $1. So it's a one to one. Yeah, I don't want to force that trade. RDTT, this is Reddit. This is May 1st after close. Reddit is sitting on a liquidity level right now. Don't really love that one. Roblox, again, kind of sitting on a liquidity level right now. Probably going to stay out of that one. Roku. It's pretty spaced out. This one has earnings. These are all May 1st. I can price these out tomorrow. Team. That's Atlassian. Equidistant between highs and lows. ALGN. Already touched it. Shake Shack. Major liquidity levels already been touched. Spotify, I put a broken winged butterfly on both sides of this today. This was post, I think this already had earnings. Yep, it's already had earnings there. Meta is tomorrow. Robinhood is tomorrow. Decent amount on Robinhood. I wish it was a little bit lower. If we dip on Robinhood, maybe looking for a call spread. I'll keep an eye on that one for tomorrow. And mRNA. That's a pretty big level. 2950. mRNA. Look at that one for tomorrow. Etsy. Both ways, that's a tough one. Price that one out. NCLH, Norwegian Cruise Lines. We kind of started close to that liquidity level. See if we can price that in. That one's fairly sensitive. And then XYZ, which is Block Inc. Oops. Nah. All right. So I wrote down what I like. mRNA, so Moderna, Hood, SMCI, and then Mag 7. I'll price those out tomorrow. See if I can get a couple trades out from a newsbreaker service. All right. Webinar is ready to kick off. I will be jumping into that session. If you'd like to join me, hop on into that link, prosperitybub.com/income engine. You can get logged in here. Post it one more time. There you go. So I'll pop over to that webinar and talk to you in a bit. All right. Thanks, everybody. Take care. Bye.